I must ask you, first of all, Morgan Stanley downgrading its global growth forecast, that really sent tremors in the oil price and also right across the markets. Can you comment on the reasons why you've done this now?
So we have also downgraded our ASEAN growth forecast. Our ASEAN growth forecasts have been downgraded from 6% to 4.8% for 2012. And this morning, I've also downgraded my equity price target index for all the ASEAN markets. Now we expect between 1 to 2% returns for MSCI Indonesia and Thailand through December 2011. And we expect the Singapore market to be worst hit. We expect negative 5% returns to December 2011 for the Singapore market.
And what has triggered your action right now? What's the concern for you?
We have been concerned on the DM growth for a while. And what's really happened in the last couple of weeks is lack of policy action, particularly both in the US and EU, triggered this whole concern about 2012 GDP growth, and hence we have downgraded our GDP growth forecast for 2012.
And also for the impact on Asia, again, from the US debt concern, from the European debt concern, what countries really feel the pressure the most in the ASEAN region?
We believe Singapore is going to be the worst impacted with global growth slowdown. And within ASEAN, Indonesia should be the most resilient market, in our view, both in terms of GDP and in earnings growth for 2012.
You did have a cautious view on Thailand back in May, of course, before the elections. What's your take on it now? And also, Thailand feel the heat, or perhaps that's being seen as the best opportunity for investment right now?
So we basically upgraded Thailand from negative to neutral and downgraded Singapore from neutral to negative this morning. We believe that between Singapore and Thailand, at this point in time, Thailand will definitely do better than Singapore. Thailand will have asymmetric risk given the political volatility in the markets there. So in an environment where there's political stability in Thailand, we believe the markets will do well. But the moment there's political volatility, which cannot be predicted very easily, I think Thailand markets will continue to do badly. So very difficult to take a very strong view on Thailand, and hence we're going neutral Thailand and positive Indonesia, which we think will be the most resilient market in both growth, earnings growth and GDP growth for 2012. Our base case forecast for Indonesia is 5.8% GDP growth and about 15% earnings growth for 2012, despite a global growth slowdown.
Hozefa, I must ask as well, next Friday Ben Bernanke speaks to Jackson Hole. Many are talking about quantitative easing 3. What would it change your forecast if there were to be that, and of course the inflationary impact on Asia? How great would that be?
So at this point in time, US is already facing inflationary pressures. Even Europe is seeing inflationary pressures. In an environment where there's another QE3, we believe at the margin the impact it will have on markets as well as the economy is going to be quite muted. For the global economy to actually come back strongly, you require very coordinated policy responses from all the developed market countries, which at this point in time appears less likely. So I would say that the chances are more skewed to the downside than the upside.
So overall, really, Indonesia again, Singapore is going to feel the pressure the most, Thailand perhaps the best opportunity right now in Asia.